Good morning and welcome. You're watching The Mining Show, brought to you by Blytheweigh on Core Finance. And I'm Charlie Gibson. Now, as you know, in this part of the world and in the mining sector, you sometimes get companies rising from the ashes. And if you don't get companies rising from the ashes, you sometimes get mines rising from the ashes as well. And in this particular case, we've got a company where probably you might be able to say that both the company and the mine are rising, so to speak. And in this particular case, the clue is in the name, as it often is. And the company is Phoenix Global Mining. And I should add, not to be confused with Phoenix Global Resources. I know they're two very similar names, but they're not the same company. This is Phoenix Global Mining, which is a mining company, as the name suggests, and not an oil and gas company, as the other one is. But joining me from the company is the Chief Executive, Dennis Thomas. Dennis, thank you very much indeed for joining us, and also the Chief Financial Officer, Richard Wilkins. Richard, thank you very much indeed for joining us. So just explain to us, you have the Empire Mine in Idaho. Where is it? And where are you taking it to?
It's in central Idaho, Charlie. Historical mine, produced copper, gold, silver and zinc back in the early 20th century. We're presently completing a bankable feasibility study to bring it back into production. All being well in 2021, 8,000 tonnes of copper per annum. We also have cobalt in the Idaho Cobalt Belt, and we've got an exploration program commencing immediately, in fact, for cobalt. We also have a small gold prospect in the Northwest Territories of Canada.
Where I dare say it's extremely cold.
Extremely cold in the winter, certainly, yes, absolutely.
Let's just stick with the Empire Mine, because that, I think it'd be fair to say, is your main asset.
Yes.
So it's a past-producing underground mine.
Yes.
You're going to bring it back into production as an open pit mine?
Yes, we are looking at the oxides, which is the upper 120 metres or so of the ore body, with the intention of having an open pit mine and a heap leach solvent extraction to produce copper cathode, targeted for 2021. And at the moment we're in the middle of a bankable just started, in fact, a bankable feasibility study, which we hope to complete second quarter of next year.
So this, you said 8,000 tonnes a year of copper.
Yes.
So in that, it's a relatively modest operation in that sense. It's with a technology that is SXEW, which is tried
Yes.
and tested. And there's a resource obviously associated with that.
Yes.
Which is how big?
Just over 20 million tonnes that we have at the moment, and we've got a drilling program to confirm the tonnage, hopefully in fact to increase it a little. That is in the oxides. The oxide has potential along strike to the north, and we'll be doing some step-out drilling in the program that we have at the moment to expand that resource. But interestingly as well, we have underground sulfides below the 120 metre level, which we will look to explore with the income, in fact, that we get from the oxide operation.
So this, if you like, you could describe this as low risk, dilution-free exploration.
Absolutely.
Effective, because the big, am I right in thinking that the big opportunity is the sulfides? That's where all the as they say, blue sky is.
Absolutely. At the moment, we know we have a brownfield lay down open pit on the surface. But the exciting aspect to the Empire operation is the underground sulfides. Our consulting geologist reckons that we probably have tested, if we've tested 5% of the entire ore system, then that's a lot. But in fact, the mine, in fact, at the end of its life in the mid-1940s was in fact producing tungsten. So that is the particularly exciting carrot, I rather suspect, at the end of the trail here.
So does that bring in a degree of metallurgical complexity, or not? If the miner's mined for tungsten, but you're mining it for copper.
Not really, no. I think in many ways, in my opinion, and no doubt the metallurgists will tell me I'm wrong, I think the complexities for me, it's more complex in the oxides, which we have an excellent metallurgical team of consultants at the moment in the BFS, but once we get down to the primary sulfides, I think the metallurgy will be a lot simpler. I rather suspect.
What sort of grades are we talking oxide, and what sort of grades are we talking sulfide?
Well, at the moment we're talking around about 0.52% copper in the oxide. Historically, the mine was working, as reported by the US Bureau of Mines, between 6 and 8% copper underground in the sulfides, primary sulfides. We will see about that. But
So these are Zambia sort of underground grades.
Yes, I suspect we'll mine them by bulk mining methods underground, and the grade will dip below that. But the old miners, in fact, were guided by visual ore. So basically they had no grade control other than a Mark I eyeball, in fact.
Yeah.
And so
But the
consequently,
Mark I eyeball was quite good.
well, they mined what they could see, which meant that they mined probably between 6 and 8%, and as confirmed by the US Bureau of Mines reports at that time.
So you're doing the bankable feasibility study at the moment. How would you expect the project to roll out in terms of the timelines? What milestones are you hitting when, and when are you hoping to enter production?
BFS second quarter next year, when we'll in earnest put in for the permitting, with a view to getting into production. I think we'll then look at construction financing, with a view at the beginning of 2021 to be in production.
To be in production beginning of 2021.
Yes.
Richard, I want to come to you now because you're the man who's going to have to finance all this.
Indeed.
So what are your financing plans?
Well, we have just completed a recent placing, £3 million. So we've cashed ourselves back up. That will take us most of the way. It'll certainly complete all the initial programs we're now working on. We have 5 drill rigs running on site at the moment. But we announced a very interesting development, I think, only the other day, because it is apparent from what we've just been talking about that these assets are in North America, and in Idaho in particular. And we've spent a fair bit of time, actually, promoting the company in North America, New York in particular, since the IPO, and have received an excellent response, if I may say so. There's clearly demand for the stock out there, and there's great interest in the whole idea of putting an American project back into production, copper in Idaho, a project that many of them didn't really know was there, and they want to be involved. But the difficulty is that whilst we trade on AIM, or solely on AIM, and in particular whilst we're trading at a penny share price, it frankly is proving difficult for the North American investor through their brokers to buy our stock.
Because they're just not used to a share price, which is...
There are restrictions and other things on a lot of brokers that they're wary of the overseas markets, but it's the penny share price in particular that is proving a bit of an obstacle.
So that's easy for you to get over. You can
yes,
consolidate your shares.
And we've been urged, frankly, to get ourselves some kind of listing in North America. So we have put application in to list on New York's OTCQX market, which we expect to complete by the end of September. And that will open up the share register to a wide range of North American investors then who can buy our stock. And we think that this could be quite transformational for us. In order to achieve this, we qualify in all respects for the OTCQX, other than the share price, which I've mentioned. The OTC requires, I believe it's a minimum equivalent of 25 US cents as an entry share price. So we have convened a general meeting of shareholders, which will be held on the 14th of August, to consolidate our stock 10 for 1, which should lift the current share price up rather nicely, hopefully at least 10 times. We will qualify, therefore, for the OTCQX, trade at the higher price for the requisite period of time, and hopefully complete that listing in September. And I think that we will see some real interest and real activity coming out of the American market in particular, but also on the back of the cobalt, probably from Canada too.
That was something I wanted to ask you. An awful lot of junior mining companies choose to go to the Canadian market, even if they do have assets in the United States. Did you think of going to Toronto rather than to New York OTC?
Yes, and we won't necessarily rule out Toronto in the future either. But we've got a lot of work to do, and we have finite resources in terms of people and cash, of course. And from talking to the advisors in New York in particular, listening to what they would like, what they think would be better, the entry level to get to the OTCQX is significantly less in terms of money. It's less time consuming, and frankly, there's a lot less regulatory bureaucracy or what have you, once you're on there. So I think that at this point in the company's development, this is a sensible, logical thing to do. Go to the United States where the primary assets are, go to a market that we can get onto easily and cheaply, that's not going to bog us down in regulatory requirements thereafter, so that we can carry on operating really as we are now. So we like this solution, and everyone we're speaking to over there appears to like it as well. Now, whether we upgrade, if that's the right word, to another market or whatever in the future, we'll wait and see. But we're happy with this at the moment.
The US main board, and I suppose we're probably all more familiar with the US main board than we are with the OTCQX. One of their criteria is that you have a trading record, as I recall, which is one of the reasons why a lot of junior mining companies aren't in New York. But that's not a problem for you on the OTCQX.
No, it's not, but we do have a trading record because we've been in existence since 2013, and we listed on AIM, of course, last year. We've got our audited accounts, and and AIM is a compliant market as far as OTCQX is concerned. So, from an eligibility point of view, that's not been an issue. We meet their minimum market capital requirements. And the only condition that was an issue was the share price.
And presumably you regard this, the 10-for-1 consolidation, as an absolute formality.
Well, the shareholders that we have spoken to, and that is a number of them, who between them all own a fairly significant part of the company, including, of course, ourselves and our partners in the Empire Mine XGen Resources, they are all in favour of this. So we are not expecting any issues in a fortnight's time now.
Excellent. Dennis, if I could come back to you finally, you were talking about those 5 drill rigs,
Yes.
was it, that are currently operating?
Indeed, yes.
They're drilling out the oxide.
Yes, well, the programme, in fact, we've got a 15,000 feet of infill drilling to, obviously, to upgrade the inferred resources into measured and indicated. We've also got 10,000 feet of step-out drilling, which will, in fact, if you like, go beyond to the north into the horseshoe blocks that we've recently acquired along strike of the present oxide ore body, and also step outside of the pit to the east, which I'm hoping we found some mineralisation, so we'll be looking to do that. We also have diamond drilling. That was RC drilling. We have diamond drilling, which again, we're doing diamond drilling not only for exploration, but we've got PQ holes, large diameter, for metallurgical testing. We've got geotechnical holes being done, so condemnation drilling. So we've got a full 40,000 feet drilling program currently underway, which is going extremely well.
2 things. One, I want to come on to you with Richard, but if all that's on the oxide, when do we get a sniff of the sulfide potential?
We've had a sniff of the sulfide potential, if you like. We put 2 deep holes in last year, in the drilling program last year, and they were really to determine structure, to if you like, to confirm the presence below the oxide, and in fact below the present workings, the historical workings. And in fact, we not only found all the skarn structures down there, we also confirmed mineralisation both outside the pit as well as down below the pit, and I think they were very successful. Also, there was how could I say it? There was a slight increase in the tungsten values as we went deeper. So again, that was encouragement for the future.
40,000 metres of drilling, Richard. This is where I want to bring you. If I was to do a sort of back of an envelope calculation in my head, 40,000 metres of drilling in a cheap part of the world, I reckon would cost you about $4 million. I think you've just raised 3 million quid, which is about $4 million. So that sounds like that finances that, but then you're going to need more.
Well, the drilling program is not costing $4 million.
Right.
Sorry, just a slight correction.
Yes.
40,000 feet.
40,000 feet.
Feet of
There you are. You see, I
drilling.
used to. That's right. All the figures have just been divided by 3 and everything,
No,
and
we're-
suddenly, you've got a lot of money left
You'd have
over.
to be slightly worried.
We're in America, and some of us older people, it's the joy of it is working back in imperial as well as metric. So we have to have templates going on in our minds to convert back to when we're in the States.
That reminds me of the weirdest measurement I was ever given, and I was in Africa and I asked for a metal content factor, and I was answered in pennyweight inches per tonne.
Well, I started off life. I started off life in the gold mines in South Africa at pennyweight. So
There we go. Excellent. All right, gentlemen, we wish you the best of luck, and thank you very much indeed. We look forward to hearing more from you and how the project is developing very much indeed. Ladies and gentlemen, that was Dennis Thomas, the Chief Executive of Phoenix Global Mining, joined by his Chief Financial Officer, Richard Wilkins, also obviously from Phoenix Global Mining. Phoenix Global, whose share price has gone up. Well, about a year ago you could get them for 2 3/4 pence, and now you can get them for about 3.3 pence. So in that time, you could have got a return of about 20%. As the Americans say, I'll let you do the math. I'm afraid that's all we have time for this week, but join me, Charlie Gibson, bringing you more mining opportunities next week on Core Finance, brought to you by Blytheweigh on the Mining Show. And until then, you have a very capital day.